Do you need liability insurance for Amazon FBA? When you do and when you don't. Many Amazon sellers aren't really sure what Amazon's insurance requirements actually are or when they're required to get it. Amazon does have a very specific trigger for when insurance becomes mandatory, and it's something you want to understand ahead of time so you can be prepared and have insurance lined up, or at least know how much it's going to cost you before Amazon puts you on the clock and forces you to rush into a policy. So let's walk through how this really works. I've served over 1,000 product brands on Amazon, and in this video, I'll show you exactly when Amazon requires liability insurance, when you don't need it yet, and a quick realistic explanation of how much it usually costs so you can plan ahead. Amazon does not require liability insurance just because you're an Amazon seller. Instead, it's once you exceed $10,000 of gross sales in a single month. Amazon's policy says you're required to obtain commercial liability insurance at that point. Amazon will usually notify you and ask you to upload a certificate of insurance and have it approved, typically within 30 days. One important thing to understand here is that the sales number Amazon uses for this requirement may not be the exact number you're looking at in your Seller Central sales dashboard. There's a bit of nuance to that, and I'll explain it in just a moment. Until you hit that $10,000 per month threshold, or unless Amazon specifically requests it for some reason, insurance is not mandatory. And this rule is purely about gross sales in a single month, which means even one strong month can trigger the requirement. That's why knowing this rule ahead of time matters. You don't want to be learning about it for the first time when Amazon is already expecting action. So what actually counts toward the $10,000 threshold? Amazon is looking at gross sales, not profit. So things like Amazon fees, ad spend, refunds, or cost of goods sold do not reduce the number Amazon is using for this requirement. If customers paid $10,000 for your products in a single month or more, you've crossed the threshold. One thing that trips people up here is that Amazon sometimes displays sales in a confusing way. For example, let's say you ran a 50% off promotion. Your sales dashboard in Seller Central might show something like $16,000 in sales for the month, but if every customer used that promo code, they may have only actually paid $8,000. In a situation like that, you would actually not be over the threshold. The $10,000 requirement is based on what customers actually paid in that month, not the inflated pre-discount number that Amazon might display. So, if your dashboard looks like it's crossed $10,000, but you were doing a lot of promotions or discounts, it's worth double checking what the real gross proceeds were. It's easy to check this by simply going to your payment section and then clicking Reports Repository, then select the month and choose Summary for the report type. Then it will give you a PDF and it will give you the amount of promotional rebates. You can subtract that number from the amount of your sales that show up in the dashboard, or even on this summary is fine, to find out where you really are. Another thing to not be confused about is that it used to be the case that Amazon looked at an average of $10,000 per month over 3 months. That is no longer the case. Now each month stands on its own, and that means a single strong month. So let's say you were doing a big promotion, or you had a seasonal spike, or it was the holiday season, or maybe a launch that goes better than expected, that can trigger the insurance requirement. And that's not necessarily a bad thing. It just means your business has now hit a certain level of activity for that month, and insurance becomes part of the picture for your business. And I'll talk about what this usually costs, because for most sellers, it's really not that bad. For a typical brand selling standard, low-risk physical products, this often lands somewhere around $40 to $100 per month, and in many cases, even less. I regularly see policies in the $400 to $1,000 per year range for normal categories like home goods, apparel, accessories, or consumer products. For higher risk categories, the cost does go up, but even here, it's usually not as bad as one might expect. For example, for consumable brands selling things like food products, supplements, or other ingestible items, I commonly see policies in the $1,200 to $3,000 per year range. Sometimes it's a bit lower, sometimes a bit higher, but that's a realistic ballpark for many sellers in those categories. Other high-risk products like chemicals, children's products, or electronics with batteries can fall into a similar range. And of course, it does depend on the actual sales volume that you're selling at the time that you buy the insurance. If you know you're selling one of these higher risk product types, it can make sense to get a couple of insurance quotes ahead of time Not necessarily to buy anything early, but just so you understand what the true cost is likely to be. That way, when insurance becomes required, there are no surprises. When it is time to shop for insurance, you've got a few solid options. I've seen a lot of sellers have good experiences working with brokers who specialize in e-commerce and Amazon sellers. Ashland Haddon Insurance is one name that comes up often in the industry. Amazon also has the Insurance Accelerator program, which runs through Marsh. They have a nice little form you just fill out right through the Amazon website. That being said, I still recommend shopping around. The other thing worth saying here is that this insurance isn't just an Amazon checkbox. Once your sales volume reaches this level, having liability insurance is actually a good thing. If someone is injured by your product or your product causes property damage, this is what steps in to protect your business. It can cover legal costs, claims, and situations that would otherwise be incredibly stressful or even business ending if you had to handle them out of pocket. So, when your volume reaches the point where Amazon requires it, that usually lines up with the point where it genuinely makes sense to have this protection in place. Now that you know when insurance is actually required and what it usually costs, the next question is, how do you make sure Amazon actually approves your COI when you have to submit it to be verified? A lot of brands have issues with that. They'll submit it, their insurance seems to meet the requirements, but then it gets rejected and they don't know why. In the next video that's coming out shortly after this one, I'll walk you through how to have your broker customize the certificate of insurance and the common mistakes that cause Amazon to reject it. If you want to avoid delays or back and forth, when that video is published, click right here and I'll show you how to handle that.